Hello, class. I just wanted to record a really quick video of a sample problem. So let me share my screen, similar to what you will see. So this is journal entries and trial balance. Okay. So I'll go through the steps. October 1, 2018, J. Crowley established Affordable Realty, which completed the following transactions during the month. J. transferred cash from a personal bank account to an account to be used by the business in exchange for common stock of 18,000. So right here, we are going to have common stock. Okay. It says right there, common stock. See that? Okay. Common stock for, oh no, this is cash because we're debiting cash for 18,000. Okay. And then we're going to have common stock down here, also for 18,000. Okay, and then second transaction. So let me see if we need to do any entries down here. So this will be A. Okay, and remember, notice how we debited it for 18,000. Actually, you know what? Let me do these journal entries first, and then I'll come back to this. Let me record that really quickly, though. Okay. So cash for 18,000, common stock, or second. B, paid rent on office equipment for the month of $3,300. Let's see. Where is that? Let's see. So this will be rent expense, and this will be $3,330. Okay, and we used cash to pay this $3,330. Okay, and let's see. Yeah. All right, and then C is purchase supplies on account. We purchase supplies on an account. So supplies on an account. So we're going to do supplies, and what was our amount? 980. Okay, 980. Now it says on an account, so this is going to be a payable. Okay, payable, and then 980 as well. Okay, and then what's the next thing we did? Paid creditor on account of 360. Paid creditor on account. So we're gonna account payable. Now it decreased by 360. Okay, 360. And then, okay, but we paid cash with it. Remember, we're paying it. So that'll be 360. Okay. And let's see. Item E says earn sales commission received. Earn sales commission received. So we're going to debit we received. If we received it, that means we're receiving cash. Okay, how much cash are we receiving? 15,125. 15,125. $15,120. Now this is going to our sales commission. Notice how it said sales commission right there. Okay, it's all the information in these, I guess these entries right here, these transactions. Okay, so sales commission. Okay, and that's going to be 15,120. Oh, not 120. Okay, now F says paid automobile expense including rent charge for month 920 and miscellaneous expense 620. Okay, so let's see. So what did it say again? Automobile expense. So anytime it says expense, that kind of tells you that's going to go to the the income statement, automobile expense, and how much was that for? 920. Okay, and then it says miscellaneous expense of 620. So miscellaneous expense of 620. Well, let's see. 620. Okay. And let me see. And then on this slide, so it says we paid it. So then we were going to pay it with cash. So those added up will be 0. So 0 will be 0, 2 and 2 will be 4, 9 and 6 is 15. So 1540. 1540. Okay, so all I did was add those up. Remember, double entry accounting says that we add whatever on the left has to equal the right. So if you think about this, these are all equal there. Those are all equal there. Those are equal there. Those are equal. This is double entry accounting. Okay. So G, let's take a look at G. Says paid office salaries. So we paid salaries. Okay. Paid office salaries. Okay. So if we paid it, okay, paid office salaries expense. Okay. And how much was that for? That was for paid office salaries. Hang on 1 second. 1940. 1940. Okay. Now, if we paid it, now we didn't use a payable, so we're going to be, we have to use cash. So 1940. Okay. All right. So 1940. Next one, H looks like determine that the cost of supplies used was $540. So supplies. So now we figured it out. Remember up here, supplies, we bought supplies and this went to our supplies account. Okay. Now we found out that we used it. So we're recognizing it. Okay. So this will be supplies expense. Now we're expensing this. Remember when we go to expense something out, it goes to our income statement. So for 540. Okay. And because we did that, and that's going to come out of our supplies account. Remember, supplies is an asset account. We purchased it, we bought it with cash up here, and now we're pulling it out. We're saying we used it. Okay, that's what's going on. We say we used it. Okay, I paid dividends. So now we paid a dividend. Okay, so dividend, how much should we pay? Of 890. So 890. And then we paid a dividend. So dividends right there. Okay. And then we paid the dividend. We paid the dividend. Now, it didn't say we paid it with a payable or a credit card or accounts receivables when whenever you receive or you send a payment to a customer. Okay. So it has to be cash for 890. Okay. So now we did these three, or not these three, all the way A through I. These are the journal entries. Okay. So again, journalized entries for transactions through A through I in chronological order. Keep in mind, these are probably in chronological order. Okay. Chronological because, first, second, third, fourth, fifth of the month, so on and so forth. Okay. And it says using the following account titles. So these are the titles of the account. If an amount box does not require an entry, leave it blank. So like we didn't do anything here, so we left it blank. We didn't do anything here, we left it blank. Okay, is that makes sense? So prepare T accounts using account titles in one. Okay, post journal entries to T accounts, selected the appropriate letter to the left of each transaction. So now what we need to do is we are going to look at our anything that has cash. Okay, anything we use cash for in chronological order. So that's why I said A was cash. So let's look at transaction B. B, so we have a cash, so B of 13 or 3330. So over here we'll put B 3330. Okay, all we're doing is we're putting these into our cash account. Okay, so we're coming up here. We already did that one. Nothing in C. Nothing. Oh, here we go. In D, we have a credit of 360. So D 360. Okay, and then E, we had a sales commission, so our cash went up to 1520. So we're going to put E right here. 1520. 15,020. Okay, just double check that. 15,120. Ooh, almost made a mistake. Okay, so 15,120. Okay, now that was E. F. Okay, we paid out cash for our automobile and miscellaneous of 1540. So F 1540. Okay, now FG again, we paid out cash of 1940. G 1940. Okay, and I know I'm doing this fast because I've done this quite often. Okay, so I do know what's going on and where this goes. In fact, I usually do this when I don't use Cengage. I usually do this in an Excel spreadsheet. So G, H, no cash. Oh, I dividends of 890. So I 890. Okay. So whenever I take a look at the difference of these two, which let me just add them up. So I have a calculator right here. So 18,000 plus 15,120 equals 33,120. I'm going to minus $3,330 minus 360 minus 1540 minus 1940 minus 890, and then we're going to have a balance of 25,060. $25,060. So I add these up and subtracted everything on this side. Now we have a debit balance. Remember, a debit balance means we have extra money in there. Okay. So once we do that, now I go on to supplies. Anytime I see a supplies, I put that in there. Okay. Supplies. Okay. Supplies. Look, C of 980. Supplies, and that was, I think, B. Let me double check. No. C 980, C 980, C 9, not 890, 980. Okay, now I gotta go through again. C, D, E, F, G, H, supplies. Look at that, supplies, not supplies expense, but supplies for 540. So H 540, H 540. Okay, good. Now I'm looking at accounts payable. I'm going back up here. Account payable A, nothing. A, B, C. Oh, there's a payable right there. Accounts payable 980, and it's a credit. Payable 980 credit. Okay, and I think it was C. Let me just double check. Is it C? Yep, C 980. Okay, let's see. Yep, 980. Okay. All right, and let's see. C, D, no payable. Oh, account payable right there, 360. Account payable 360. Okay, D, account payable 360. Account payable 360. 360. Okay, perfect. Oh, by the way, notice how up here I forgot to do this. 980 minus 540. So calculator here. I guess some of you could do this on your own. 980 minus 540 equals 440. So down here, there's a debit balance of 440. Okay. Now over here, remember on your payables, you're going to have a credit balance. So 980 minus 360 equals 620. Okay. All I did was this large number minus the smaller number. and we get 620. Okay. Now over here, notice this number is larger than the right side. Your debit's larger than your credit. So that's why we're going to have a debit balance. That means we have $440 of supplies in the supplies account. That's all that's saying. Okay, now we're going to common stock. Okay, let's look in common stock, and it's going to be a credit. Common stock right there, 18,000. That was our initial investment. So that'll be A for 18,000. A for 18,000. Like so. Now let's look at dividends. Did we pay any dividends? Yes, right here. I for 890. I for 890. I for 890. Perfect. Now we're looking at sales commissions. Commissions, by the way, commissions is revenue. So you know, sales commissions right here, 15,120, and it's E 15,120. Let me just double check. 15,120. Good. Okay. Notice how whenever you just have one entry, you don't have to add or subtract, like the common stock, dividends, or sales commissions. Now let's look at expenses. Now we're getting in sales commission. These are revenues, and the rest usually are going to be income statement. All these are balance sheet stuff. Okay, and you'll start to see these patterns. So we're in rent expense. Let's see how much rent we paid. Rent expense. Where's rent expense? So B for $3,330. $3,330, and that was B. Let me double check. B, rent expense. Okay, perfect. All right, there's only one entry, so nothing. Office salaries expense. Let's see, office salaries expense. Rent expense, office salaries expense. There we go. G for 1940. G for 1940. Okay. Okay, 1940. Now we're looking at automobile expense. Automobile expense right here for 920. F 920. F for 920. Alrighty, and then let's see, supplies expense. Here's our supplies expense for 540, so H for 540. H for 540. Now I need miscellaneous expense, so I just got to go back up here. 620 miscellaneous expense, 620. Miscellaneous expense, I'm going to put this number in so I don't forget it. What did I say? I hope that was H. Double check. Nope, it's F. Oops. See, always double check. Okay, F. All right. Okay, so next, so prepare. Now we're looking at 3. It's saying prepare an unadjusted trial balance as of October 31, 2018. List all accounts in order of assets, liability, stockholders' equity, revenues, expenses for the box in which no entries required. Leave it blank. So keep in mind, these accounts are, again, cash all the way to dividends. Those are all balance sheet items. Okay, and then we get into our income statement, sales commission to expenses. So up here, we'll start with cash. Okay, what is our balance? Well, our balance was 25,060. Actually, I should just cut and paste it. I would make a mistake. Copy and paste it, and I'm going to put it down here, just like that. Oh, whoa, oh, okay. Well, let me do that. 060. Let's double check. 25060. Good. 25060. Supplies, our balance is 440. Supplies 440. Supplies 440. Okay. After our supplies account, we have accounts payable. So now we're on our liabilities. So liability, remember, we have a credit amount. So account payable for 620. AP 620, 620. Okay. And let's see. What's after account payable was common stock for 18,000. Common stock for 18,000. Remember, it's called a balance sheet because they balance, but keep on this, we're unadjusted. We haven't made any adjustments, okay? After common stock, we're going to dividends. Dividends, and we have a debit balance of 890. Dividends, 890. Dividends, 890. After dividends, we have, now we're moving into our income statement. Sales commission is a credit, 15,120. Sales commissions, 15,120. Okay. After sales commissions, we have rent expense. So rent expense. Oh, I forgot to look at the amount. Rent expense, 3330. 3330. Okay. After rent expense, I'm going to have office salaries for 1940. Office salaries for 1940. Okay. After office salaries, I have automobile expense. See how this is the thing that's kind of tedious because there's a checks and balance that you're going to see here in a bit. Okay. Automobile expense 920. Automobile expense 920. Okay. Automobile, no, so supplies expense 540. Supplies expense 540. 540. Oh, 540. And what's left? Miscellaneous 620. Miscellaneous 620. Okay, now here's where we add them up. So I'm just going to get my calculator and add up all the debits and all the credits. And if they equal, then we're good to go. If not, we got to figure out where we made the mistake. That's why in accounting, there's always a balance. Remember that assets equal liabilities plus owner's equity. It always balances. That's why in one of the videos I said it's basic algebra. Okay, so 25,060 plus 440 plus 890 plus 3330 plus 1940 plus 920 plus 540 plus 620 equals, I have 33,740. Okay, so that's our debit. Now we got to add up our credits now. 620 plus 18,000 plus 15,120 equals, oh my goodness, 33,740. So notice that they balance. They balanced. Okay. So amount of total revenue recorded in the ledger. So amount of total revenue would be this amount right here. Remember, your sales commission is going to be your revenue, 15,120. Okay. Amount of total expenses. So notice anything with an expense, right? So these ones I'm going to add up and put in this box right here. So let me add those up. Okay. So 3330 plus 1940 plus 920 plus 540 plus 620 equals 7,350. 7,000, oh, not 7,350, 7,350. Okay. Amount of net income for October. So our net income is going to be our revenue minus our expenses. So we're going to go 15,120 minus 7,350, and we get, so this minus that, $7,770. $7,770. Okay, and just 1 second. Let's see. So determine the increase or decrease in retained earnings. So with this question, what this is saying is, so our retained earnings, because this amount is 770, our income statement closes out to our retained earnings. Okay, if you think about that. Okay, remember, income statement closes out to net earnings or retained earnings, and then retained earnings goes into our balance sheet. Okay, it goes into our balance sheet. So it's going to increase by $7,770, this amount right here, which is going to be an increase. All right. Now, if we were in the negative, right, and the negative here for our net income, then this number would be probably negative. They call that a net loss. And this would be a decrease. And what happens is, if you think about it, this money would come out of this account right here, our common stock. Okay, if it was negative, but we added value to it. So remember that. So this 770 would actually go into our common stock, or retained earnings, but it essentially is common stock. Okay, so let's check our work. Let's see what happens. Let's see what happens. Oh, what? Oh, why is this saying? Why is that? Okay, let's double check everything up here. That's good. That's good. That's good. That's good. Those are all green. Okay, those are all green. Our journal entries are good. Okay, so something happened. I subtracted incorrectly. So let me do that math again. So $15,120 minus 7,350 equals. Well, I got that. Okay. All right. Well, what does this say? Okay, so maybe I need to go 770 plus our 18,000. 770 plus 18,000. But you know what? We had a dividend. So 18,000. What was our dividend amount? 890. Now let's add back our 770 equals 24. Determine the increase. Okay, so 24880. Okay, let me check that. So check my work. Whoa, it's still the same. Okay, all right, so hang on one second. So retained earnings, it did increase. Okay, it didn't increase by this much. Okay. Let me look at that. That's correct. Where's our retained earnings? Common stock. Okay, let me see this again. Okay, so see how, look, I'm trying to find this. And by the way, this happens sometimes. Okay. So, and then we just have to go back and try to figure out where we made the mistake, or where I made the mistake. And if you made the mistake, then you would go back and figure out where you made the mistake as well. So it's some problem solving. Okay. Okay, let me try this now. 25,770. Okay, let's check our work. Okay, all right. See, it doesn't give us the answer. It just says partially incorrect. It says, look at the ending balance for each revenue expense account. Add all expense amounts together to obtain the total. Revenues minus expenses equals net income. Compare the ending balance of stock, the beginning balance of stockholders' equity. Recall that stock will increase with revenue and decrease with expenses and dividends. Okay, so, oh, I know what that means. Okay, so I need to take 770. Let's try this. We also need to minus our dividend of 890. So 68,880. Let's try that. 68,880. Okay, check my work. Oh, okay. All right. Okay, so what happened? Let me explain this. Okay, so let me see if I can get an annotation tool and text. Okay, so notice our income, net income was 770. We have to minus our I guess, what do you call it? Retained earnings. And I think that was 890. That's where we'll get 6880. Let me just double check that. 7770 minus 890 equals 6880. Yep, that's correct. So when you get to that part, that's how you would do that. Okay. So that's kind of, let me delete this or clear it. Okay, and stop. All right, so that's kind of what this would look like. Again, if we go through and take these numbers, we can actually create an income statement. We can also create a balance sheet. But if you think about it, let me do the annotation tool again. So anything above this line, this is where this would be income statement. Okay, up here, this is where we had put on the balance sheet. Okay, now keep in mind, I didn't put this in here, but the difference here minus our dividends, that is where we got our retained earnings. So our retained, it goes income statement. Let me put this over here, and then that goes to retained earnings. Let me do a draw tool so you can see them. So that goes there, and then retained earnings closes out to our balance sheet. So income statement, revenues minus expenses, to retained earnings, which goes on the balance sheet, and these are balance sheet accounts up here. Okay, let me clear them all and stop. Okay, so that is an example of one of the homework problems that you guys will all do. Again, that's a step. Some of your homework has you doing these journal entries. Okay, that's this part. And then I went through and showed you how to do those accounts. Okay, all right, let me know if you have any questions. Thank you.